If you want your kids to have a great conversation, not to fight about money, and stick for each other, and take care of the surviving spouse when you're gone, you probably need a week, a month, and a bottle of wine with your significant other to really talk about these things and imagine, how will the world look like? Or how do I want it to look like when I'm not around?
Gather ye rosebuds while ye may. Old time is still a-flying, and this same flower that smiles today, tomorrow will be dying. Welcome to Visionary Advisor. I'm your host, Alex Kirby, founder of Total Family. Today's topic isn't easy, but it's essential. We're talking about death, and more importantly, grief. What do clients actually experience when they lose someone they love? And since death is not an if, but a when, how can advisors show up in ways that truly matter during one of the darkest moments of a family's life? To help answer that, we're joined by Ron Gura, co-founder of Empathy. Ron and his team recently released The Grief Tax, a report that sheds light on the emotional, administrative, and financial burden families face after loss, and what advisors can do to be a steady, compassionate presence. This is a conversation every advisor should be prepared for, whether we feel ready or not. Let's get into it with Ron Gura. Ron, your company that you co-founded, Empathy, published a report called The Grief Tax. I read it. I loved it. And we feel like advisors are very close to this process. Do you agree? Is the wealth advisor an important component of this process of someone experiencing loss and navigating that?
Alex, I don't think we can think about a persona that is closer. These guys are really the fabric of the family, and at least those who are good at what they're doing, they know exactly what's happening, and they're really focused on not just the service and the mission, but also the generation loyalty piece, of course.
Yeah, it's interesting. The stat that we talk about a lot is 81% of heirs end up not using their parents' financial advisor. No one really knows the reason. It could be that they don't have a relationship with them. It could be they didn't reach out, they don't value them, etc. But as I read your report, that is really well done.
Thank you.
And we'll link it in the show notes. But as I read your report, I started to wonder, is it the process itself that could be leading to this? When someone loses someone and they call the financial advisor and the financial advisor doesn't have good answer, or they realize maybe some of this work hasn't been done, or they really see what's been going on. Is that, when I read everything that you put in the grief tax, it made me wonder, is the process itself causing some of this?
Look, we can dive into the stats and the numbers, but my 2 cents, working closely to this on a qualitative basis, I think there's 2 main reasons that are outside of the regular scope of financial advice. Okay. I think the first one is just money is a really sensitive topic, and it keeps changing. It's evolving. Technology and the pace of change are driving even more innovation and more optionality around finance, savings. I'm not just talking about using a better app for buying stock or being savvy about or interested in crypto. I'm saying in general, money and finance is generally tied into innovation and new solutions. And that's why payments companies are always trying to keep up with the needs. It's not intuitive for anyone to think that whoever was supporting my parents for the last 30 years is the best modern solution for me today. Now, it could be different, but it's just not very intuitive for the adult child who is now a next of kin to think, I should use the same exact person that my old man was using for decades. Now, it's actually money in many cases, and for most of us, is about wealth preservation and being pragmatic and taking a long approach. So you actually might want to really positively consider the exact same relationship of the people who already know the family, your values, your house, etc. But it's just not intuitive for a young generation that is used to doing everything, let's say, with software, knowing that their mom could be a lot of things, but for most of us, we don't think about our moms as an investment guru. So
That's
like whatever decision she made, I might want to revisit that. And same for my dad or anyone else. So that's one thing. The second thing I think is outside of the numbers, and it also kind of a human emotional aspect of generational loyalty and wealth transfer, is if you're contacting me after the loss, then it's, yes, there is a transaction happening in the background, but it also means I'm grieving a loved one. Okay. So it's not just, oh, we need to talk about the mortgage. We're going to do refinancing. Something has changed in the world. No, I just lost a loved one. Now you're calling to sell me something. Now, obviously, the financial advisor is not an ambulance chaser. He's not following you from the funeral with a business card. But for some, it feels like that. Because I didn't talk to you much, if any, in the last 10 years. And now you're calling and you say I should do this and that. Let me think about it. I want to see my options first.
Sure.
We fully understand that grief is made hard by logistics and finance, and logistics are made harder by grief. That's a good opening, I think, for the mindset we at Empathy are really focused on, a comprehensive approach to understand you cannot decouple emotional and financial during these life events.
Yeah, your report is really eye-opening for someone who, and I think from the perspective of the financial advisors, you could see them, depending on how old their clients are, they should get to know this grief process a little bit, right?
Mhm.
Because we're only going to lose our parents or some of these people in our lives a handful of times. This isn't going to happen to people every single year. But the financial advisors have an opportunity, I think, to guide in the same way that empathy does. And you have one of your quotes that I loved: grief is often invisible, yet it's all around us, affecting people in meetings, Slack channels, and family text threads. And I think it's an opportunity for financial advisors to make people feel like they're being cared for through this process.
I think it's exactly that. It's an opportunity, but you have to do it right. Like every transaction should be thought of as a potential relationship.
Right.
But how do you do that? How do you change the conversation from, I lost my dad, where's my money? Here's a glass of wine as you wait for a table.
Sure.
That table could be so many different things for so many different people, but it can't just start with, sorry for your loss, check is in the mail, or sorry for your loss, let's talk about your dad's accounts.
Yeah.
You have to shift from sympathy and condolences to empathy and action, build trust, save me some burdens, and only then start a conversation about how can I be of service to you?
I've experienced loss in my life just like everyone has. And my brother-in-law has experienced a tremendous amount of loss in his life. And he always talks about how people sometimes say, let me know if I can do anything. And that doesn't really help. And then often when you ask them, they can't do it. It's, oh, could you pick up the kids? They're like, I actually can't today. It's like, all right, but never mind then. But what do you think the advisors don't understand about loss or grief? Maybe a misconception, but just maybe a misconception given your space where you sit in this space.
A common misconception is that it's capped in time and natural loss is not as hard as unnatural loss. So for most people, when we see someone and they lose their parents, we're saying all these things like, at least he had a full life, or at least you were able to hike together, ski together last week. And what people need at that moment is they don't need an at least. And I don't think your grief is always the hardest.
Yeah.
It's really hard for someone else to come from the outside. And it's hard to generalize grief for financial advisors and how they should support, but understanding that usually for every job family, especially in finance, but every job family, you're not thinking about end of life. We are humans. We're trying not to contemplate our own self-mortality.
Sure.
And we're trying not to think about it. So even people who work as financial advisors or even life insurance agents or claim representative obviously see a death certificate every hour, they still don't define themselves as someone on the end of life workflow.
Yeah.
Because they're trying so hard not to think about it. In fact, if we zoom in and say, this is pretty natural, this doesn't skip any of us, and we have to talk about this taboo topic because like any other taboo topic, not talking about it is not going to help.
Yeah.
And finance and financial education is perhaps the best example. If you think about the 80s and how people were just not talking about money, and this was a really huge gender issue as well. Education is key. Talking about stuff is the beginning. Having reports and data and seeing other people and being able to put yourself in their shoes, that's the beginning of any shift from a transaction to a relationship.
Is there such thing as a fire drill in this world? I haven't really heard of any advisors doing this. I was talking about it with a group of them. You have your couple clients in their 60s, 70s, 80s, whatever, just having the conversation of let's pretend that tomorrow is the day. How ready are we? And the work that we're doing is different than the work that you're doing, but there's overlap. And the idea that we want people to write letters to their kids, you and I are both dads, write letters to their kids on their birthday. We don't know when our last day is going to be. There's no way to make the situation easier, but I can picture me not being there and saying, hey, I'm sorry you lost your dad. He wrote a letter to you every single year on your birthday for your entire life. And that doesn't make it better, but are there fire drills we should be doing or things that we should be like simulating, practicing? So it's not just, you know what I'm asking?
Look, most people don't do any estate planning. This is the area where both empathy, especially around our life vault vertical, and total family, we play both in the same space. People just don't do it. They don't want to think about it. And the vast majority of Americans just don't have a single skew inside the estate planning spectrum. Now, when you do have it, you think you're done. I made a will, I made a funeral directive, or whatever the skew is, and I'm done. It's not about a fire drill. It's about understanding this is a living, breathing legacy. Just like you're changing, that legacy should be changing and tweaking and updating at least once a year.
Yeah.
So the focus areas that we choose to implement on our estate planning platform that is now adopted with more than 7 million people in the US, with amazing partners like Aflac and New York Life and Voya and others. What we're doing there is blending the emotional planning. You just touched a few examples as well. Letters, recipes, meaning. How do I want the day-to-day to look like when I'm not here? And having the conversation about, okay, let's talk about a trust.
Sure.
Let's talk about a will. These conversations, in my opinion, should not be decoupled. At Empathy, no product we're doing is a one and done or something that feels like a pure fintech, blue, 5 minutes and you're gone. It's not easy. This is human and messy and complicated, hopefully very empowering. You probably need a week, a month, and a bottle of wine with your significant other to really talk about these things and imagine, how will the world look like? Or how do I want it to look like when I'm not around?
Yeah. Obviously, Viktor Frankl, Man's Search for Meaning, a book I'm sure you've read, he talks about if you know your why, you can endure anyhow. And I think that in this work, whether it's through our lens or yours, you need energy to do it. The why gives you energy, right?
Victor speaks about it, but I think both in capitalism and in Buddhist people will find their spot on the spectrum that say, this is planning. What we really want to do here is say, we plan everything else. I want to get into Ivy League. I need to take these steps. I want to get promotion at JP Morgan. I'm going to do X and Y and Z. Now, if you want your kids to have a great conversation, not to fight about money, and stick for each other, and take care of the surviving spouse when you're gone, that sounds good. Let's reverse engineer from that.
Sure, totally.
Just imagine that day. It's not a fun exercise, but you should do it once in a while. Say, okay, if today is the day, and I'm not gonna. What about the passwords? What about the money? But also, what about mom's meatball spaghetti recipe? And what about the family feuds? How are people going to treat each other when I'm not around?
I don't know if there's like a national estate planning day or a national legacy day or something. Maybe that's something we should like try to figure out with people, because it isn't, the longer you wait, the more there is to do. It's like cramming for the final exam hours before. It doesn't mean it's impossible, but man, you're banking a lot on that small stretch of time. And if we could help people just get started and know that you don't have to finish, if you can just do some of this work for a little bit of time. And also, we have older advisors listening who have older clients. And to me, it's like they have to set an example, right? If they think about everything that they went through with their own parents when they passed, and all the logistics and all the stuff they wish they had and all the questions they wish they had answers to and all the things, they can start to do some of that work themselves so that chain ends. And their kids can look at their parents and say, man, my dad put a lot of thought into this. Or my dad or mom put a lot of thought into this, and I'm going to do the same. Because at the end of the day, the example is what they see.
Absolutely. It's about the family. It's everything we're all doing. It's about keeping everything together. And I don't know a better way to do it in an affordable, scalable, meaningful way other than really good software.
Yeah, of course.
That's how we think about it. And I don't think
Definitely.
you build really good software without really meaningful capital and meaningful talent. So that's my day to day. How do you put talent and capital together, building a more resilient society, showing up for families, saving them time and money, and hopefully stress when the inevitable happens? And where do you connect that to? How do you make really small, important connectivity? So during that moment of truth, the information will come to you and everything will be a little bit less overwhelming.
Yeah, like you said, it's happening. It's definitely happening. So one of the things I hadn't heard, and probably just because I'm not in your specific space every single day, is this sandwich generation of my dad is 79. My youngest child is 3 months old. I think I'm there. I think I am the sandwich generation. You probably are too.
Right? We identify the sandwich generation as millennials and Gen X that are like 67% of the workforce right now.
And that's why I just hadn't really thought about that. Why is this group so vulnerable? If we're thinking about both through the lens of being employers, through the lens of advisors, what should we know about the sandwich generation if they're going through stuff like this?
So look, the sandwich generation at the end of the day is not the anomaly. It's the crisis we have now. It's a care crisis. The anomaly is the baby boomer generation. Now you have a very broad generation and that is saving a lot of money.
Okay.
What's unique about the millennials and Gen X coming after them is that it was always hard to work and raise a family. It was never easy. Our grandparents can tell us stories about a work-life balance from a different angle. But
sure.
Two main things has changed. The first one, every day that goes by, the world is getting more connected and the lines between the house and the workspace are blurred.
Sure.
Especially in cities, the work-life balance is tricky. So that is one thing that has changed. It's not about raising kids is new. It's not. It was always hard. But 50 years ago, when you were raising a family, you did not take care of your 95 years old parent because they were not around. But because of medical innovation that we can criticize if it's extending life or quality of life, but de facto, you have people living longer. And that is a really broad generation. So what's happening, us in the middle, taking care of our kids and our parents as dependents, two different types of diapers, if you will, at the same time. It's costly. It's creating a lot of attention, quickly family feuds.
It's interesting, the sandwich generation, like, as you said, people are living longer, so this is unique. This hasn't happened before. Also, my dad was one of 8 kids. I'm not saying in any way that my grandmother was not a good parent, but she wasn't as plugged into what her kids were doing day to day as the modern parent, right? At any given time, they might say, hey, where's Lee? And she might say, he'll be back soon. It just feels so different now. And I know there's a lot of pushback happening in this arena of giving kids more freedom and all that type of stuff. But that doesn't change the reality of what is happening for the sandwich generation right now.
Right. And if we can link this back to a financial advisor, this is a new situation. And the sandwich generation is connected to the boomers. The boomers are connected to the fact they're not just broad, they're also focused on savings. So what's happening is the greatest wealth transfer in history in the background. We can't treat it the same way we were doing business before. We have to use more technology, more touch points, more engagement, more opportunities to create relationships early on. And it starts with more value back to the family. The information is more accessible than before. The expectations are higher. The complexity of the mixed portfolio is higher as well. You have to improve. You have to do more. Families are expecting a lot more. And I think technology and specifically software is the way to bridge that gap.
Yeah, it's also like we had a family, we were working with a family in Arizona in their family office, and the mother had passed after being sick. This is a sandwich generation daughter who was raising 3 kids in South Carolina. Now we have the situation of the dad being in Arizona. He's now alone. She's going back and forth to support the dad while also trying to raise her kids. They got through it, but it would have been really nice if maybe some of that was discussed proactively. And, you know, for that family office to say to their client, because there's a lot of great stats about caretakers in your report too. I know you're banking on this caretaker, but your caretaker has 3 children under the age of 7.
Exactly. Let's zoom in on that, because just like anything else, just like the estate planning piece that we talked about, also caregiving is the same combination of emotional and practical. I think every big life event, if it's a divorce, if it's a new child, if it's a wedding, if it's your natural disasters, it's always a mix of a big financial, big emotional. And if you zoom in on the caregiver for a second, which is the unsung hero of the Stanley generation, who basically take a second job, thankless second job.
And they're actually paying, according to your survey, they're paying their own money. They're not getting paid, they're paying in a lot of cases.
They can't afford the next gap. And if you oversimplify this, let's say there's 100 emotions and 100 practicalities, okay? You're navigating both. So 18 months before the loss, when it's anticipatory loss, as we refer to it, or in an advanced stage of caregiving, if I need to name one emotion out of the 100, I would say it's guilt. You're navigating mostly guilt. And then on the administrative side, you're navigating many things. But if I had to highlight one, I'd say it's Medicare Advantage, benefits, etc. Then 18 months later, the guilt becomes grief. Medicare becomes a state law. There's always art and a science. There's always an emotional, practical. And it's only if we build a comprehensive solution, put it in the hands of the families and say, we get it. This is not going to be a one and done. This is not going to be 5 minutes and you're done. No, this is messy. Yeah. Let's figure it out together.
That's such a good way to look at it. And you alluded to a natural disaster, like one of the, when we talk about legacy letters and some of the family documents that we're using, it's always, this is in a more durable form. We just heard a horrible story of a family losing like all these records in the fires in California. There's one copy of them. They're now gone. And you know, to your point, they're navigating all of the rebuilding the house, dealing with the insurance, dealing with like all the logistical pieces of a natural disaster, while also saying, wow, every family picture that we had for the last 75 years is now gone.
A very overwhelming situation. If you've been following us, you'd see that every few months we had another big moment of truth on this platform. So we started with a loved one. How do you navigate that? How do you do a headspace for grief that is also a TurboTax for estate settlement? How do you do both? And we have 45 million people covered in the US with our loss support product, with amazing partners like New York Life, MetLife, Prudential, Lincoln, Voya, TD Bank. And then the estate planning piece, LifeVault. How do you help them plan in advance for that emotional, practical moment on the comprehensive estate planning situation? We just launched the disability product with MetLife. That is another big life event. You're calling in and you just lost the ability to be the provider of the family. You need to make some around of the house. You're not going to play basketball with the kids anytime soon, if any. So these things are not just about money or just about emotions. So if you go back to natural disasters, as you said, that person who lost the pictures, they can call our friends at the Hartford or State Farm and say, I lost my house. Where's my money?
Yeah,
But they didn't just lose their house. They lost their home. They
for
lost
sure.
they lost the kid's bicycle. They don't
Yeah,
know where they're going to sleep next week. They have
right.
lots of questions. Continuity of care is really how we think about these challenging moments in life, and showing up for people with technology and compassion and resilience,
Yeah,
I think is the only solution. You have to connect it to the right moment.
that's right. Yeah, I love continuity just as an idea. The family offices that we work with, the true family offices that we work with, they don't lose clients at transfer. The ones that are doing a lot of this extra stuff, they're retaining everyone. The kids are the clients before any of this stuff ever happened. So it's possible, but it's pushing the advisors into some of these ancillary value add areas. I want to ask you about bereavement because there was a stat in there that the average bereavement is 5.56 days. And bereavement, the definition of bereavement for the advisors is the loss of a close loved one, or do some employers define it differently? Is there
Well,
a certain definition?
when you say 5.5, you mean bereavement leave. So
Bereavement leave. Talking about bereavement leave. Yeah.
the time and pay that employer XYZ gave Mrs. Jones, that is insane. And the average in the US is gradually improving, but it was 3 days only recently and shifting to 5. Look, it's not even inclusive for meaningful religions to just say back to work in a few days.
Right.
Not to mention, you have hundreds of hours and thousands of dollars and then more than 18 months of median work as you're winding down your loved one's affairs. Now, I'm not expecting employer XYZ to say, come back whenever you want. It's expensive.
Sure.
But we have to think about it the right way, just like we thought about other life transitions. Look at what happened to maternity, rightfully, and parental leave in the last decade.
Yeah.
We understand this life transition. A new person.
I feel like it's gotten better, maternity leave, but it's certainly moving in the right direction. I don't know if anyone would say that we're doing it really well.
There's a lot of room between what's happening in Copenhagen and New York in terms of how you want to think about it. But there's also pros and cons to the impact on work and career. What we can agree on that 20 years ago, that a young lady had a newborn and she came back to work within days, very strange to us today. That notion is strange to us today. Where I come from, that's 6 months when you come back. And in New York today, that could be a few weeks or a few months, depends on your employer. But we can agree that a few days was just not something that is aligned with our values in society today.
Sure. Agreed.
And agree that we'd like to see more and more of the founders involved as well in this critical time of a life transition and a new life. Now, we've made changes, regulatory changes, employee benefit. Anyone from the White House to Marsh McLennan and Mercer, all the way to Nike and JP Morgan and the life insurance carriers of the world made changes.
Yeah.
Support leave of absence that is needed. But what about another life transition? What about another change of life that is happening in my own intimate, private home, and I'm unable to bring my whole self back to work within days? How are we 26 in a few weeks still talking about 3 or 5 days of bereavement leave? And if you're already getting time and pay, let's say a few days, where's the bereavement care that comes on top of time and pay? That's what we're doing. And we're so excited to have progressive employers like AT&T and CarMax and Paramount and others who are saying, I want you to have more than that, even when you're coming back to work. I know you're still busy. And connecting that with the financial advisor, with the estate planning, that's what we're doing.
What do you think is the right policy if you're talking to some of these companies? I understand the paid days might be different than the actual days versus whatever, but where do you think this needs to go for someone to look at their employer's policy and say, that is an empathetic bereavement policy? Because this isn't happening to people like every single day, right?
You should give 3 weeks of paid leave. But the truth is, it's very expensive for a small medium business to do that. And it's going to be a huge shift.
Could we make the argument that it's expensive for them not to do that?
Absolutely.
If it's an employee they want to hold on to?
they will never forget how you treated them in a moment of truth like that. And it needs to be a policy. By the way, a lot of places, the policy could be 5 days. And then the direct employer would wink and say, I got you. You're working this week. That is not good for the corporate.
Agreed. Yeah, a compassionate manager will say, oh, don't worry about this or whatever.
And it's very nice for the manager, but this should be an HR decision.
Yeah.
And it's not, we don't need the manager to capitalize on the resources. The company is making that investment. So just saying you're working from home this week, when you're actually on a very much needed compassionate leave, is not the way to do it. Defining that is much more important. And my advice would not be necessarily go 1 week or 3 weeks or 5 weeks, because it really depends on the industry and the average pay and the competition. Benefits are fundamentally about keeping up with the Joneses and being able to attract and retain talent for your organization.
Okay.
And being human about it. But what I will say, let's get rid of the notion and the narrative of a first circle and a second circle. Let's not tell people what's meaningful to them. Maybe that grandfather I just lost is the one that actually raised me.
Right. Yes.
And that's more meaningful to me than anyone else on this planet. And for many, maybe the friend on 4 in the family that we just buried in the backyard as pet parents, maybe that's devastating, and I can't bring my whole self. Let's not say what's a meaningful loss to someone, especially when you think about miscarriage and other unseen types of loss.
Yeah.
Often unseen. Stillbirth and infant loss. These are meaningful ways that employers should start talking about inclusive bereavement policies and not say, if you lost a parent, you get X, and if you lost someone else, then there's a resource from the library.
I think that is really well said advice, Ron. Apparently they do this thing with the first circle, second, third circle. That sounds like a horrible way to do it. And I love what you're saying of just understanding everyone's situation is different. And at the end of the day, if it's an employee that you care about and you trust and they're an adult, they're also going to be responsible with this decision too. They're not coming in every week saying, I have another bereavement situation.
Absolutely. Fine. We have to show up for people at the moment of truth.
If we could maybe close on this, obviously, I think a lot of these advisors are going to look up empathy. So maybe take that off the table for a second, but just things that you've seen of meaningful actions that an advisor might be able to take. They're either maybe give us one preemptive and then one that they could take after an event, after a true loss event.
Alex, I'm biased. Whatever I think should be done, I baked into our products. For example,
okay, that's fair.
So let's take the first one about estate planning. So if you're an advisor, you're one of many advisors looking and using our LifeVault solution. You want to make sure you're signaling advice and information the right time. So you're giving someone a tool to update you in a simple, natural way when you should call and vice versa. Let's take an example. I'm giving you the most modern estate planning solution. And then you have a newborn and you decide to update your will. It has a checkbox about, I'm updating my advisor as well. Now he can call and talk about financial mix, insurance mix, adding that new beneficiary on other places as well, and vice versa. It could be that you're having a conversation with the family yourself, belly to belly, kitchen table, and then they're saying, I added just some crypto to the mix, or I just bought a house, or I have a down payment, or I have a newborn. And then you say, let's update your estate planning across the board in one place. That's how you keep things connected.
You have stats about how many people are doing estate planning. We've seen it all over the map. It's not enough people. Right. And the advisor saying, I brought it up to my client and they weren't interested in it. To me, that isn't good enough. So on the proactive one, it's like, start to view some of this stuff as whether or not you see it as your responsibility, you're going to get blamed if it's not done. If this person was your client for 3 decades.
Absolutely.
And you didn't get it done, right?
But let's get real. People don't do it not just because they don't feel like it's messy. We don't want to contemplate our own self-mortality. And software that they can do it step by step at their own pace, have small wins, have videos supporting them, have information, have smart pre-filled fields. You don't need to type the name of the son. Easier for them.
Yeah.
And by making it easier for them, you're going to increase the chances they're actually going to do something.
Mm-hmm.
On the it need post-loss support, let's go back to that example you gave on your family and someone saying, how can I help? Let me know if you need anything. That's sympathy. Let's move to empathy. Don't ask me if I want a burger. Tell me I'm ordering 2 burgers and what do you want on yours?
Yeah.
Make it happen. Tell me that you're
That's
there
good.
and say, look, I just sent you a link with software that is going to help you with probate and the funeral ceremony and selling. Everything you need is in there. Add me as well so I can help you from within the app.
Okay.
Proactive about it. That's my advice.
Yeah. That's beautiful. Really well said. Everyone, please check out the grief report from Empathy. Ron, thank you so much for coming on Visionary Advisor. It was great. And I'll see you soon, I hope.
Definitely. Thank you very much.
That's it for Visionary Advisor. Thank you to our guest and to Total Family, whose Family OS software is helping advisors do legacy better. If you're a fan of Visionary Advisor, please subscribe, share it with another top-notch wealth advisor like yourself, and we will see you next time.